Good morning, everyone, and welcome to Cyber Insurance, Potential Liabilities and Current Trends. I'm Vinny Civitello, Communications Manager for the New Jersey Business and Industry Association. With us today is John Wolak of Gibbons PC. A few housekeeping matters before we get started. Today's webinar is being recorded and will be emailed to you tomorrow along with the PowerPoint for today's presentation, so be on the lookout for those. If you just can't wait, you can download them right now from the Handouts tab, but I'd also like to draw your attention to the Questions tab. John would be happy to take all of your questions, so don't hesitate to write them in as they come to you. And I can't stress that enough, write them in as they come to you, or you may forget what you wanted to know by the time we get to the Q&A. So now let's get things started. John?
Sure, thanks, Vinny. Good morning, everyone. And on the questions issue, as Vinny encouraged, send them in as they come to you. In addition, at the end of the PowerPoint is my contact information. And if down the road an issue comes up, just shoot me an email, and I'll be happy to address whatever it is that is a matter of concern or confusion. Today's presentation, we're going to talk about cyber insurance coverage, and with respect to the insurance coverage aspect, privacy and security issues are undeniably an integral part of today's business, regardless of the industry, regardless of the size, regardless of the location of the business. Treatment of confidential information, whether it be personal information or business information, is vital for successful and continuing operations, not only within the company itself, but as a company may interact with its employees and contract with various vendors. Just as the technology that we use in business is constantly changing, privacy and security issues and risks are constantly changing. Part of my practice is addressing planning and compliance issues for companies in terms of their data privacy and data security programs, policies, and procedures. Another part of my practice is dealing with insurance coverage and specifically cyber insurance coverage, and we're going to talk about that today. And so in connection with cyber, there's a range of risks that every business faces, as I said before, regardless of size, regardless of industry. One of those risks is sensitive data that a company might receive, process, and store, whether it be personal information, health information of employees, payment card data that is used in connection with processing payments, either online or at a point of sale, company intellectual property and research data, employment records, government data, and the like. It's important to note here, I started with PII, personally identifiable information, and that the scope of what constitutes personal information subject to privacy and security regulations is constantly changing. In fact, now it's been morphed into just a general reference to personal information. It includes a lot of different types of identification numbers, whether it be an IP address or cookies, data about computer usage, and even biometrics. So one aspect of the risk of cybersecurity is the types of data that a company uses and collects. Another issue is risk factors affecting data security, and you see them listed there: the diversity of residents, of customers, clients, vendors, and employees. If your operations are local in scope, national in scope, or global in scope, that is going to dictate what it is that you need to comply with in terms of regulatory and legal aspects, but also it's going to dictate the level of risk that you have as the scope of operations extends outward into various jurisdictions. And that's important because, as we'll talk about in a bit, the application of privacy and security standards is dependent upon where the person resides whose information you have collected, are using, or are processing. It's not necessarily dictated by where you're located. It's a personal right. It's a personal recognized right under the law, and it's based upon the residence of the person whose information is used. Another risk factor, the volume of the data, obviously, whether that be paper data or electronic data, the greater the volume of that data, the greater the risk. Where that data is located, whether it's on your own servers or on cloud servers, brings its own risks with it. The scope of your operations, diversity of employees, and by diversity of employees, I don't mean diversity in the traditional ethnic or racial sense. I mean diversity in terms of familiarity and comfort dealing with technology, dealing with electronic data, and the like. Some employees very good at it, other employees not very good at it, and the challenge is addressing in a comprehensive way all of that diversity in order to implement an appropriate privacy and security protocol, procedure, and platform within your company. Information sharing obviously brings along a lot of risks with it in terms of sharing information with third-party vendors or others in connection with operations. And as that information is shared and transported over lines, that obviously creates a whole set of different types of risks. Decentralization of operations, universities, typically hospitals, where there are various locations and there's an exchange of information across a diverse location of operations creates greater risks as well. Another risk factor is the typical types of security incidents that a company may be exposed to. Physical loss is one of those aspects which cannot be and should not ever be overlooked in terms of a lost or stolen laptop, a phone, thumb drive, or the like. Paper records, again, should not be and cannot be overlooked. This is not just an e-data or an e-commerce issue. Paper records are an important aspect of any program of security and the like. And we'll talk about an instance where literally the tape fell off the truck and medical records were lost forever, actually, and resulted in significant liability. Other types of security-related incidents is, as I mentioned, the transfer of information to vendors or business associates, or the disclosure of information to vendors and business associates. A lot of the breaches that have made the headlines over the course of the recent past have originated because vendors, third-party vendors, have been granted access to company systems, and it was through hacking those third-party vendor systems that ultimately the hackers were able to get into the records of, for example, Home Depot and Target and the like. Rogue employees, otherwise unauthorized users, and human error is probably one of the most significant aspects of security-related incidents, and it is the soft spot that hackers, the bad guys, try to exploit, is just negligence and human error, whether it be for authorized or unauthorized or improper purposes, and whether it's intentional or not in terms of the disclosure. That is certainly a risk that has to be considered and addressed. And finally, the database and server breached, unauthorized access to those stores of information present a significant risk with respect to both personal information and company secure data. Finally, the regulatory framework that a business is subject to and must comply with creates a significant aspect of risk. And you can see here it's a veritable alphabet soup of compliance obligations. It depends, the compliance regime on which a business is subject to depends upon its location and the scope of its operations. Where you are, excuse me, where you are and where your customers are, what type of business you're in, your industry vertical, and what information you collect in connection with your ongoing operations. Some of the regulations that I've cited here are federal in scope, as well as there are some state regulations. Graham-Leach-Bliley applies in the financial markets. The FTC Act talks about unfair and deceptive trade practices, and the FTC has kind of flexed its muscle over the course of time to extend unfair and deceptive trade practices to cover data breaches, data security issues. And we've seen that with respect to a number of enforcement actions and ongoing enforcement actions. The FTC is becoming more active recently. FERPA applies to educational institutions. HIPAA and high-tech applied to medical records and medical information. Payment card industry, PCI DSS standards with respect to the transactions involving payment cards and credit cards. The GDPR is the latest four-letter word, actually one of the recent four-letter words in the data and privacy area. Many of you may be familiar with it in terms of 31 nations in the European Union and the European Economic Area regulating how personal information can be processed, stored, and used. The California Consumer Protection Act, the CCPA, is actually the latest four-letter word. That is an act that is set to be enforced as of, excuse me, January 1. It becomes effective, and then it can be enforced as of likely June 1. The interesting thing on the CCPA is that even though it's going to be enforced and effective as of January 1, it is still subject to modification. Just last month, October 10th, amendments to the statute were adopted in California, and on October 11th, the Attorney General of California issued regulations which were purporting to clarify and assist in compliance efforts. I'm not sure it actually achieved that. So stay tuned on the CCPA in terms of where that goes. Biometric information is one of the latest areas of regulation. Illinois is a leader in that. And then the New York Shield Act was recently enacted by Governor Cuomo with respect to not only breach notification issues, which became effective on October 23, but also with respect to privacy and security requirements for businesses who collect and have information on any New York resident. And those compliance obligations become effective in the middle of next year. It's also important to note, with respect to New Jersey, there have been ongoing efforts in the legislature to implement data privacy and security compliance obligations for businesses to enhance the privacy and security of state residents' personal information. Nothing has been enacted to date, but there are ongoing negotiations and legislative efforts in that regard. Again, stay tuned in terms of where that goes. I would expect something to be moving forward within the next year or less. And so with all of these risks, we end up, there we go. With all of these risks, businesses are faced with the challenge of how do we mitigate these risks and how can we transfer the risks here to no longer be a liability for the company in the event of a breach, in the event of some type of a data privacy or security incident. And historically, the mitigation of those risks has been under traditional insurance policies. So you see some risks might be addressed in a directors and officers policy if it involves decision-making by directors, officers, or companies' employees with respect to bad judgment or bad decision-making that impacts the company or creates liability for the directors and officers. Errors and omissions policies and professional liability policies, typically in the tech space, is where these policies apply on privacy and security incidents. Property policies do provide some coverage, and we'll talk about an instance where a property policy is being challenged right now for coverage as a result of property damage from a cyber incident. Crime and theft policies is a particular area with respect to business email compromises and phishing events where companies have transferred, in many cases, extraordinary amounts of funds to false bank accounts, which funds are lost forever because of the hackers' schemes to take money. And then also commercial general liability policies, where coverage for personal and advertising injury is typically responded not to business email compromise and the transfer of funds, but other types of liabilities that arise out of data security incidents. So with respect to insurance coverage and coverage for cyber risks, traditional policies have provided coverage in the past. That coverage, as we'll see in a moment, has been narrowed oftentimes by insurance companies, but there is still incidents where coverage under these traditional policies may exist. So if you're subject to an incident or you're reviewing your coverage profiles with respect to what coverage may apply in the event of a security incident, don't neglect, don't discount potential coverage under these policies because it may exist, and you should consult a insurance professional to assist you in determining whether coverage may exist under these traditional policies. For today's presentation, though, I'm going to focus on the last two, the crime and theft policies and the commercial general liability policies. Talk about the property policy a little bit, but the biggest area under these traditional policies has been the crime and theft and the commercial general liability policies. I don't want to discount the property policies, though. We are going to talk about that with respect to, as I said, one recent incident. Coverage under the property policies is typically on all risks of physical loss or damage. And you can see there, this is language quoted directly out of a property policy, covering loss as a result of physical loss or damage to electronic data, programs, or software. And that's good coverage. It's not always in policies, but it's worth checking to see your property policies to determine if there is coverage for electronic data and programs. Years ago, it was typically excluded in property policies. That type of coverage has started to come back into a traditional property policy, so it's worth a review there. You can see some additional language in terms of business income loss, and this is one of the evolving areas in terms of cyber coverage, is what happens when a company experiences a cyber event and their operations are shut down and they suffer business interruption and business income loss, or alternatively, one of their vendors suffers a cyber event, and as a result, that vendor can't perform services that are an integral part of your business, and as a result, you suffer a contingent business income loss or a contingent business interruption. Property policies typically will provide some coverage for business income loss, whether it extends to data security events or not, again, depends upon the particular wording of the policy, and it's worth reviewing your policy to determine whether that coverage is available under the property policy. Moving over to the crime policies, you can see that here, the way the crime policies are set up is, and I've quoted some language here, the crime policies may provide coverage for computer fraud, funds transfer fraud, again, that's business email compromise type of incident, or any forgery. An example of the computer fraud policy language is set forth there, and it provides for paying for loss of money, securities, or other property resulting directly from the use of any computer. And that language is very important, resulting directly from the use of any computer. That language has been subject to interpretation by a variety of courts, as we'll see later in the presentation, and coverage may rise or fall depending on how that phrase is interpreted in coverage litigation. So with respect to your crime policies, you want to take a look at that, see if the crime policy does extend to cover computer fraud, funds transfer fraud, and forgery, and what the specific language is with respect to that coverage that may be available there. With respect to CGL policies, that coverage has typically centered on the coverage B of the CGL policy, which covers damages arising out of personal and advertising injury. And you'll see there I have at the second check mark provided the standard definition of personal and advertising injury, which includes injury from oral or written publication in any manner of material that violates a person's right of privacy. And the way that the claim here under the CGL policy typically shapes up is that a business suffers a data privacy or a data security event. Personal information is accessed by unauthorized individuals, hackers or others, and they have that information and they take that information and they're able to use it for their nefarious means, however they determine to use it. That claim would be submitted under a CGL policy and coverage would be sought because the disclosure of the information is a written publication of material that violates a person's right of privacy. And the violation of the right of privacy is that your private information, the customer's private information, has been exposed to the world or unauthorized users, and therefore the company who suffered that exposure or who made that disclosure may have potential liability to the customer or the person whose private information has been exposed. The question on the interpretation and the cases that have interpreted coverage under CGL policies have focused in on this definition of personal and advertising injury, and specifically on what constitutes publication. Is publication something like Pandora's box? As soon as the box is open and the information is out there, that information is published? Or does publication require someone actually accessing the information in an unauthorized manner, actual disclosure of the personal information? What does the phrase "in any manner" mean? Does it mean actual access? Does it mean that the information is out there and it has to be broadcast through print or through publication in electronic means or public or hard copy means or otherwise? And what exactly is the right of privacy and what does that policy extend to? Does it extend to the disclosure of personal information, that your private information has been put out in front of the public? Or does it extend to only the right of seclusion and your right to be left alone? Not the disclosure of your information, but if that information has been used in an unauthorized way, that may violate your right of seclusion. So there's a number of different issues with respect to CGL policies, and the courts have addressed that over time. I've summarized a couple of cases here for you that have looked at coverage under CGL policies and interpreted those terms, primarily the publication term and what that means. And so the Zurich American and versus Sony Corporation case, you may recall, this was one of the early cases years ago where Sony was hacked through PlayStation, and the hackers were able to access hundreds of thousands, if not millions of records, credit card records and other personal information of not only minors, but also their parents. And Sony sued Zurich for coverage for that event, and Zurich denied coverage. The case was brought in New York State Court, and in that case, the court concluded that publication required an affirmative act by the policyholder, in this case, Sony. And because the breach did not involve an act by Sony, in other words, the access was solely with respect to the hackers gaining access to the PlayStation database, not because of an affirmative act by Sony. There was no publication and therefore no insurance coverage under the CGL policy. That case went up on appeal to the Appellate Division of the Superior Court in New York, and the case settled before the Superior Court issued its decision. At the time, back in 2014, 15, and 16, it was a hotly watched case, but both parties reached a settlement and therefore didn't provide the guidance that was anticipated with respect to coverage under CGL policies. The next case, Recall Total, is the case where literally the information fell off the truck. Recall Total had sued Federal Insurance Company for coverage because a data breach incident occurred. Excuse me, Recall Total was transporting tapes of information, computer tapes of information from IBM's corporate headquarters in Armonk, New York, to Recall Total's storage facility. And while the truck was driving down Route 9, literally the back door opened and the tapes fell off into the road and were irretrievably lost. Recall Total suffered $6 million worth of damages to remediate and mediate the issue, because hundreds of thousands of personal records, medical information, and employment records of current and former employees was lost. And so Recall Total sought coverage from federal insurance under its CGL policy. And in that case, the Connecticut court concluded that there was no coverage under the policy because there had been no publication. There was no evidence that a third party had actually accessed information on the tapes. The tapes were never recovered. They were never located. No one had ever claimed that their personal information was improperly used or used for an unauthorized mean. And so there was no evidence that the tapes had actually been accessed. Because of that, the court said no publication. Because there's no publication, no coverage. So you can see in one court in New York says publication requires an affirmative action by the policyholder. Another court says publication requires actual access to the information, which was present in the Sony case, but not in the Recall Total case. And then the third case that I highlighted was the Travelers case, Portal versus Portal Healthcare. And in that case, the court reached the exact opposite decision of Recall Total. And what the court there said, that if publication requires actual access to information, that would mean that books on a shelf in a library that are published but that have never been taken off the shelf are not technically publications. And that just doesn't make any sense to the court in the Travelers Indemnity case. And the court concluded that publication does not hinge on third-party access. It occurs when the information was placed before the public. And so in that case, the court found that there was coverage under the CGL policy because the facts of that case were such that patients in a hospital were standing around. I guess they were bored. And so they decided to Google their own names and see what comes up. And the first search return for each of the two patients was a full version of their medical records. Obviously a problem. And that was the basis for the claim by Portal Healthcare against Travelers. The court in that case found that there was coverage because once the information was placed out onto the internet, that constituted publication. There didn't have to be any proof of actual access, as the Recall Total court had concluded. So you can see that that one little phrase, and let me go back here, that one little phrase about oral or written publication in any manner that violates a person's right of privacy is just chock full of ambiguity. And the courts interpreting that phrase have been all over the place with respect to cyber events. And that creates a great amount of uncertainty, not only for the insurance industry, but for policyholders and corporations and individuals who are looking to plan for the future and mitigate risk that the business might have, which could damage or dramatically affect the company's success going forward. And so what the insurance industry did in 2014 and thereafter is that they modified the CGL policy to restrict the availability of coverage under a traditional CGL policy for cyber events, for data privacy and data security events. And here's an excerpt from policy language of a CGL policy, and you can see there that the insurance carrier has modified this language to provide that the insurance does not apply to, this is an exclusion, it does not apply to damages resulting from access or disclosure to any person's organization or personal information, including patents, trade secrets, processing methods, customer lists, financial information, and then the more personal information, credit card information, health information, or any other type of non-public information. So as a result of this modification in the policy, the insurance carriers were seeking to restrict the availability of coverage under the CGL policy. And you can see the second highlighted area there, that the exclusion applies even if the damages are claimed for notification costs, credit monitoring expenses, forensic expenses, public relations expenses, or any other loss, cost, or expense. A similar type of exclusion was included with respect to personal and advertising injury arising out of access or disclosure of any personal information or confidential information. And again, the exclusion was expanded to include notification costs, credit monitoring expenses, and the like. So in response to that uncertainty in the interpretation of the CGL coverage terms, the insurance industry was modifying the policies in order to provide some certainty and to provide some limitation of its risk. The insurance companies saying that it never contemplated that a CGL policy would cover data security and data breach incidents. In addition to the narrowing of the language that I cited for you, they also, the insurance industry also developed exclusions that were added to CGL policy forms and provide for different types of exclusion with respect to, you can see the disclosure of confidential and personal information in certain instances. And these exclusions are typically endorsements that are added to policies. They may be part of policies that you have right now, or the forms themselves may be changed. The main policy may have been changed to include the language I cited earlier. So what that creates is a very big risk based on the factors we talked about earlier, where coverage may not necessarily be available under a traditional CGL policy. And so there's a void in the marketplace, and that void is filled by cyber liability insurance. And we'll talk about that now. Cyber liability insurance is a supplemental risk mitigation tool which is used in conjunction with other data security measures. And it's important to mention that cyber liability insurance isn't the panacea. It's not the cure-all. It doesn't solve all a business's woes. The fundamental step that a business can take to mitigate its cyber risks in terms of privacy and security is to plan appropriately, implement appropriate policies and security procedures for the business and the information that is collected, and then look to transfer the remaining risk through a cyber insurance policy. So that's why it's referred to here by me as a supplemental risk mitigation tool. Other data security measures are infinitely more important in terms of protecting data and security of the confidential and personal information your organization collects, uses, and processes. It's an integral part of the overall risk management. It doesn't replace a property policy. It doesn't replace the general liability policy or the D&O policy. It's intended to address a separate part of risk. There may be some overlaps in coverage. That is typically a benefit rather than a detriment. And so by using a cyber liability policy as part of your overall risk management program, you're going to be more effectively mitigate the risks that the company is facing. You need to ensure that the policy provisions address the unique risk of the institution. Knowledge is key, and knowing what risks you face, what information you have, and how that information is used is a very, very important aspect of obtaining appropriate cyber coverage. There's a lot of competition in the cyber marketplace, and there is really no standard type of coverage that's out there. It can easily be tailored to fit the specific types of risks and operations of your individual business. That's why it's important to know what you have and how you use it, and then you can appropriately tailor the policy to those unique risks that you have. It's important to articulate the risks and expectations to enable that negotiation and the tailoring of the policy and its terms and conditions. And as I said at the opening of this program, cyber-like technology is an ever-evolving issue. Technology is ever-evolving in terms of its usefulness and facility in our operations. Cyber insurance is an ever-evolving risk mitigation tool, and it's important to evaluate regularly coverage needs based upon your changing operations and the emerging risks. We've seen a significant uptick over the last year to 6 months in ransomware activity, and if you had a cyber policy a year or two ago, maybe your ransomware coverage was minimal or at a baseline, whereas now you'd want to revisit that cyber liability ransomware coverage to make sure that it's at an appropriate limit and it appropriately reflects the risk that your company may face with respect to ransomware. So on the cyber liability insurance, that's where those are some of the initial aspects that the policies are intended to address. The market itself provides two different types of coverage. Third-party liability coverage, that is liability that a company may have to other people outside of the company, damage caused by the company's activities to third parties. So you can see there privacy and network security liability if you have a breach that causes damage to a third party, or if there's a breach with respect to social media that comes up, that will be covered within the third-party liability coverage. Regulatory liability with respect to fines and penalties that the company may face because of non-compliance with regulatory schemes. And as I noted at the outset, regulatory aspects are becoming increasingly important. Regulators are becoming increasingly active. Legislatures are becoming increasingly active. And so regulatory liability is going to be a growing area of concern for companies with facing compliance obligations on the state level, on the federal level, and on the global level, depending on the scope of their operations. So the cyber market covers third-party liability as well as first-party liability coverage. First-party means damage to your own property. Much like a property policy, this is property policy with specific emphasis on damage to your own cyber property or your own cyber issues. So in the event of a breach, there's crisis management, and you need a public relations firm to manage customer inquiries, press relations, press release, and the like. Notification costs, which can be daunting depending on the scope and extent of the breach. Identity monitoring. Business income loss and extra expense, I mentioned this earlier. This is, again, an area that is often overlooked, but is very, very important because it's an area where if there is a cyber incident that affects your business and shuts down your business for any period of time, you may be able to recover business income loss or contingent business income loss, depending on the the terms and conditions of the coverage that you have. System failure attack and other aspects, extortion and ransomware. Forensic investigation is an important aspect of coverage that is available through the cyber market. Some examples of the underwriting considerations that you might face in terms of procuring cyber coverage is in completing the application that you'll get from the insurer markets. What type of information do you collect, process, and store? Where is that information located? And what is the location and geographic scope of your operations? What is the applicant's exposure with respect to the potential vulnerabilities of your system? Doing testing to determine and identify vulnerabilities? Are you doing patching of software on a regular basis to make sure that you have the most resilient, latest form of the various software that you're implementing in your business? Does the applicant have written policies and procedures? Has there been a thoughtful approach to addressing the privacy and security issues within the company's operations, and that approach memorialized in written policies and procedures that address privacy and security? Has there been a security assessment or an audit in the last 12 months? What representations are made in the application, and what exposure exists for potential violations to privacy laws and the like? On the policyholder side, some of the things that you'll want to think about in exploring cyber coverage is what kind of employees and how many employees do you have? How many devices do you have and computers? Do you need to provide security and privacy coverage for paper records as well as for electronic data? Do you have the use of cloud service providers in terms of your storage or processing of data? A number of years ago, a client had asked me to look at a cyber policy. They had moved all of their operations to a cloud-based hosting website. They went out and got a policy for cyber coverage. They were all ready to execute on the cloud-based transfer, asked me to look at the cyber policy, and it turned out that the cyber policy didn't cover any data stored in the cloud, which was obviously a problem and required a little bit of remediation work. So, thoughtful approach to your operations and obtaining appropriate coverage. Rogue employees, not necessarily that you go out and hire rogue employees, but have you had prior problems with respect to employees accessing data that they're not authorized to access, or conducting themselves in a manner which creates unusual risk with respect to privacy and security? What types of transactions, what laws are you subject to? Do you need to protect confidential corporate data? What about third-party coverage? Mentioned that before in terms of vendors that you use in your operations, as well as vendor services that you may provide to others in the context of your operations. Fines and penalties, exposure, business interruption and contingent business interruption, I mentioned that, and other types of specialty coverages. Some of the policy terms and conditions that you may see in the cyber policy is system maintenance requirements or minimum security practices, specific conditions precedent to coverage rights. This typically comes up with respect to the cyber coverage for things like ransomware or other types of security incidents that are criminal in nature. Cyber policies will often require notification immediately or within a very short period of time to the authorities and to the insurer as a condition precedent to coverage. So you need to make sure when you obtain a cyber policy that you understand the terms and conditions that are part of the coverage grants that the insurer is providing in the policy. What are the notice requirements with respect to a security or a privacy event? Mergers and acquisitions, how does the coverage change, if at all, if you are acquired or you acquire new entities? What are the definitions? Sometimes hidden exclusions or hidden limitations in coverage could apply in the definitions sections of the policies. You want to make sure that insureds under the policy cover employees, because that is one of the weakest areas in the corporation that can be exploited by the bad guys in terms of gaining access to your confidential and proprietary data. Coverage for third-party vendors. The retroactive date is a very important date. If you're not familiar with retroactive dates, it's basically a line in the sand, and the retroactive date specifies the date on which coverage for an event will begin. So if the retroactive date, for example, is specified as November 1, 2019, then if a security incident occurs on November 1, 2019 or after that, there may be coverage subject to the terms and conditions of the policy. If the security incident occurs before November 1, 2019, there is no coverage. And the case law is pretty clear in terms of the application of a retro date, hard line in the sand on coverage. That's important because, as many of you are familiar with, hacking events typically occur well before, months, if not years, before they are actually discovered. And so if the hacking event occurred before November 1, 2019, but it didn't manifest itself until after 2019, it's likely that you will not have coverage for that security incident, which could be a business killing or a very devastating situation. One of the benefits of the coverage is that breach response providers, many of the insurers have pre-approved and pre-vetted providers that are available to assist in the event of a security event or a security incident. That doesn't preclude the policyholder from using their own vendors, but it just provides a benefit or a service which many policyholders rely upon. One thing to look for specifically is sublimited coverage. If you procure a policy for $5 million of liability, there may be sublimits of $1 million, for example, with respect to a ransomware event or a business email compromise event, or for regulatory fines and penalties. So you just want to be aware of the scope and extent of all the coverage and the impact of sublimits on potential coverage. I want to talk about, in the kind of waning few moments here, I guess before we go here, Vinny, do we have any questions? If you have any questions, shoot them in, and we can take them now. What I was going to go through now are just some real world examples and some cases, but why don't we pause here and take some questions?
Sure. So one question that came in anonymously was, as a small business, it's difficult to justify the spending $10,000 plus for annual pen testing and quarterly vulnerability scanning when I can purchase a cyber policy for less than $5 that would cover the cost of breach response up to $250,000. Do you believe carriers will be willing to offset the proactive costs and manage the risk upfront?
Well, it's going to depend on a carrier by carrier basis. I mean, certainly the applications that are out there currently, they started long years ago, they got shorter, and now underwriters, given the variability in the risk, underwriters are looking to expand the scope of the application again. That application certainly will ask about audits and testing and the like. You make a good point in terms of the trade-off of allocation of resources. It certainly is a negotiation point to raise with the broker or your agent and to discuss in the underwriting process. I would say, in my experience, that the more secure you can demonstrate that your environment is, the more likely the underwriter and the insurance market will receive that favorably, but that does not necessarily mean that's to the exclusion of providing you with a benefit of coverage. Also, with respect to the vendors that I mentioned earlier, many insurers have identified pen testing vendors that can assist on a pre-incident and a pre-breach basis, and those typically are at discounted rates. So it does in some way address your question about will the insurers modify costs with respect to the benefits under the policy in terms of that security issue.
Great. We have another one here from Neil, who asks, you kind of got into the line of retroactive, but this is a little different. So it says, what is the statute of claims or statute of limitations for cybersecurity liability claims? And do you see that changing to a longer period?
It depends on what you mean by statute of limitation for claims. Claims under the policy for coverage is typically a contract-based statute of limitations. In New Jersey, that's 6 years. It varies by state to state. With respect to the damage that may have been caused to third parties, the liability, the statute of limitations that typically applies is the tort liability statute of limitations, which also varies from state to state. It's typically 2 or 3 years at this juncture. And I don't know if that'll change either on a federal level or on a state-by-state basis. It's important to note at this point here, as I mentioned before, the compliance obligation and the application of law with respect to an individual's personal information is determined by where that person resides. So if you're a medical practice and over the course of 10 years you've seen patients in all 50 states, despite the fact that your regional medical practice is in New York, New Jersey, and Connecticut, you have potentially 50 state compliance obligations because you have that diverse of information. Now, all that having been said, the law that applies to policy interpretation under your cyber insurance policy is going to be determined by where you are located or where the policy is issued to. Typically, it depends, a little bit more complicated analysis, but generally speaking, it would be where you are located, which could very well be different from the jurisdiction or jurisdictions, plural, that you have to comply with for privacy and security obligations. Also, some cyber policies do have choice of law provisions in them, which will trump the location issue that I just identified. So the state law issue that you raised with respect to statute of limitations has a broad scope in the cyber area in conjunction with compliance obligations, as well as the application and interpretation of policies.
Great. I have 2 more, but why don't we go through the rest of the presentation? We can save them for the end. I know we're coming up on the 12 o'clock hour right now, but if you have a meeting, you have lunch you want to get to, by all means go. Everyone who's registered for this event will get a recording of it automatically tomorrow, so no need to feel like you're missing out on anything. Otherwise, feel free to stay with us and ask more questions in a minute.
Yeah, and the next slides, the next few slides here are really just real-world examples of events as well as policy interpretation with respect to coverage. I just wanted to highlight for you to give you some real-world flavor on what happens in connection with cyber losses. So P.F. Chang is a case that was decided back in 2016. What happened here was P.F. Chang's restaurant was breached. You can see 60,000 credit card numbers were stolen. Federal did reimburse some of the costs, but the issue was whether there was coverage for assessments of $2 million under the contract agreement that P.F. Chang had with its credit card processor. And ultimately, the court concluded that coverage was not available because of the terms and conditions of the coverage that P.F. Chang had. So I highlight this because it's important to understand that your cyber risk can come in a lot of different areas. And if you're processing credit card data and credit card information, your agreement with your provider will most certainly have fines, penalties, and assessments that may or may not be covered under your cyber policy, and you want to be aware of that in terms of risk transfer. The next case I want to focus on is the Apache Corp case, again from 2016, and what this case was dealing with was specifically a business email compromise. Apache had a process in place to deal with the request for payments. A employee at Apache got an email requesting the transfer of money. They followed the procedure. They went through the callback process. They requested letterhead, written authorization. All of that was orchestrated by the hackers in terms of complying with the request for a callback, providing the letterhead, written authorization for the change of bank account information and the like. And so I highlight this case really for two reasons. One is because it emphasizes the sophistication of the hackers and their ability to thwart even security protocols and procedures that are in place. Now, there was some failure to follow up here with respect to Apache, and that's ultimately what the court did seize upon in denying coverage. And in this case, the court, and I believe it was a punitive decision. I respectfully disagree with the court. I think it's wrongly decided here. Other cases have gone the other way. You can see that this case interprets that language that I highlighted earlier, the resulting directly from in the crime policy. And what the court said was that the transfer of the money to the criminal's bank account did not result directly from the use of a computer. It resulted from the failure of the employees in the chain of processing the payment to prevent the transfer of the money. Again, I think it's a punitive decision. I think it's result-oriented, wrongly decided, but nonetheless, it's out there as an example for others to use. The reason I say it's wrongly decided is because the metadata case was similarly a business email compromise case, and in this case, the Second Circuit reached a different decision and distinguished the Apache result and said that, you know, the compromise here and the wiring of the money overseas was the result of a breach of the system, and that the human component and the human aspect that was involved in the process of the payment and making the payment to the fraudulent account did not break the chain of causation, which would have interrupted the availability of coverage. And so in the metadata case, the court looked at the circumstances and took a more broad view of what that language resulting directly from meant, and found that the human component, if the human component broke the chain of coverage, that would effectively eviscerate coverage in every instance of a business email compromise, and that's not what the coverage was intended for in the court's opinion. The Moses-Alfonzo case is important because it emphasizes the business interruption or the business income loss coverage. This is a law firm up in Rhode Island that was subject to a ransomware attack. There's 12 employees, I believe. Somebody clicked on an email improperly, and they were out of business for 3 months, resulting in a $700,000 reduction in revenue. I mean, this is devastating to the business. They did have cyber insurance coverage, but it did not, according to the insurance company, appropriately align with the circumstances that occurred as a result of the data security incident. The claim was filed by Moses-Alfonzo seeking coverage. The case was settled without a decision or a determination in terms of the interpretation of the policy or the party's respective position. Again, I highlight it here because it is just actual evidence of the devastating impact of a ransomware attack, putting the business out of commission, and the failure to appropriately align coverage with the risks that the business faces in terms of business income loss on a going forward basis. And the last case that I'll highlight is the Mondelez International case. This is a recent case, was filed about a year ago in Illinois. Mondelez is a global snacks company. They make everything, basically, Oreos and various snacks. And they were subject to the NotPetya attack, which permanently disabled 1,700 servers of theirs and 24,000 company laptops. They filed a claim under their property policy, and it's important to emphasize their property policy here. As I said before, look for coverage wherever you can. It may not be there. It may not be in those traditional policies, but they shouldn't be discounted or discredited simply because they are non-traditional. They are not cyber policies. They are traditional type policies. So this case is still pending. Mondelez sued Zurich for coverage under the property policy because the policy covered physical loss or damage to electronic data, including physical loss caused by the malicious introduction of the machine code or instruction. Zurich denied coverage in that case, and the circumstances of the denial of coverage are suspect, to say the least. But ultimately, Zurich denied coverage based on the war and terrorism exclusion, saying that the NotPetya virus, which you may recall originated in the Ukraine, and it was intended to intervene in the dispute between the Ukraine and Russia and to disable their respective systems. Unfortunately, it not only affected the Ukraine, but it had spread across the country, and across the globe, and it impacted thousands of businesses internationally, including some of my clients. This case is still ongoing. Whether the Zurich denial of coverage will be upheld by the court based upon the war exclusion remains to be seen. As the plaintiff asserts in that case, it is unprecedented. I don't know. Many practitioners in this area have very strong opinions one way or the other in terms of whether this exclusion should be applied to a non-traditional cyber event under property coverage. It's a hotly watched case, and it'll be interesting to see where it goes from here. That concludes the presentation. I'm happy to take more questions. If you, again, as I invited at the beginning, if you have questions or some follow-up issues with respect to any of the topics that we've discussed or anything that comes up later, please, by all means, reach out to me, give me an email, and I'll be happy to get in touch with you. Vinny, if there are any other questions, I'm happy to address them now. Otherwise, we're done.
Thanks, John. Yeah, we have a couple still in the bank from before, but I'll kick things off and ask a question of my own just to get things rolling. So you gave us a lot of great information. What are the next steps someone would want to take if they wanted to explore some available coverage for the cyber market?
I want to emphasize, in terms of next steps, you got to know what you have. That's the most important step with respect to not only going out into the market for cyber coverage, but ensuring data privacy and security and appropriate measures within your organization, whether you're subject to compliance and regulatory obligations or not. If you have personal information of customers, consumers, and employees, then you need to have appropriate data privacy and security measures in place. The first step is knowing what you have, knowing where you keep it, how it's stored, knowing how you use it, and then how it is protected. And then once you have that base of information and base of knowledge, you can consult with a knowledgeable broker in this space who can help you access these cyber markets. There's a number of brokers who specialize in this area, and depending on the size of your business, I'd be happy to speak with you and refer you, give you leads in that area if you'd like. But that would be the next step, is to consult with a knowledgeable broker in this area who's going to give you access to the markets, going to learn your business, and then help you tailor the terms and conditions of the policy to the risks that your business is facing, whether it be from a data incident, a regulatory incident, a property damage perspective, or any other type of exposure that the business may have.
Thank you. All right, so another one from Neil, who asks, with so many operations being outsourced to overseas companies, how do policies underwritten in the United States apply to claims involving outsourced companies? Are there international laws to protect businesses for cyber risk?
If data storage is being outsourced internationally, there is nothing in the United States currently that regulates on a general basis the transfer of data outside of the United States. Now, there may be sector-specific regulatory requirements in the financial services industry particularly, or in the healthcare industry particularly, but as a general matter, with kind of as a blanket, there is nothing that regulates the transfer of information outside of the United States on a U.S. regulatory perspective. State by state, there are requirements for data protection and data security. Some of them may extend to the transfer of information outside of the jurisdiction, not only of the state that you're operating in, but also outside of the United States. With respect to the insurance coverage aspect, you can get insurance for regulatory fines and penalties in the event that it's determined that you're not compliant with either industry-specific or jurisdiction-specific requirements for the protection of security and privacy. But separate and apart from all of that, it's important to focus in on the contract itself and the relationship between the parties in the contract and where the risks are located for purposes of contracting, either they're with you as the owner of the property, of the information, or with the vendor as the service provider storing and processing that information. So it becomes a third-party contracting issue that really requires careful attention and detail. The policies, as I said, do respond to typically third-party risks that may be created as a result of your business operations. With respect to the transfer of information, there are regulations for information collected on EU, European Union residents under the GDPR that may impact your business. And if you have operations in the EU and are transferring information to the US from the European Union, there are requirements that must be met under the GDPR because the European Union does not recognize the United States as having adequate security and privacy measures in place to protect the personal information of European Union residents. So the regulatory and compliance regime is a bit complicated. If it's transferred from the US outside, no blanket regulation. Industry-specific regulation or jurisdiction-specific regulations may apply depending upon your specific operations. And as I said before, if it's operations located outside of the United States and transferring information into the U.S. under the GDPR and some other international regulations, whether it be China or Brazil, South Korea, North Korea, depending on where your operations are, the regulatory regime may impact your ability to transfer that information.
Okay, we have one more from Neil, who asks, if a child's private information is stolen, how long does that child have to file a claim?
It's a good question. Typically, with respect to any type of injury that a child suffers, they would have until at least the age of majority, and then the limitations period beyond that. In the privacy and security area, the collection and use of minors' data is subject to COPPA, the Child Online Privacy and Protection Act. With respect to an actual litigation, I would say typically that's going to be dictated by the state law where that child is located. Generally speaking, in other areas, it is the age of majority plus. Whether it applies specifically in the event of a privacy or security breach would depend upon the specific state law that applies.
Cool. Actually, I have one more question. So, what else would you recommend that our listeners do to mitigate against cyber risks?
Well, as I said before, I think in addition to the insurance coverage aspect, I think it's important to really get a good understanding of the information that you have and collect and process and where it's located and implement measures. Privacy and security is not just an IT, an information technology function. It's not a computer function. It is a business operations function, and it requires decision-making at the highest levels of the organization, whether you're American Express or you're a local insurance broker in New Providence, New Jersey. And so the most important aspect is care and attention to privacy and security issues and affirmative decision-making and planning with respect to that. I understand that it takes time. I understand that it takes the dedication of time and potentially resources, but the alternative I submit is unacceptable, because the alternative is a security incident which could be devastating in the short term as well as in the long term. So not unlike real estate, where the most important thing is said to be location, location, location. In privacy and security, the most important thing is planning, planning, planning.
Well, thank you. That looks like all the questions we have, so I think it's as good a time as any to bring things to a close. Don't forget, all of you will be receiving a recording of today's webinar and the PowerPoint slides via email. Lastly, when you close out of the webinar, a survey will come up on your screen that we hope you'll fill out so we can understand how to best provide you important information in a webinar format. Our next webinar, Leave Loss Summary, will take place November 21st, so by all means, feel free to register for that one right on our website at njbia.org/webinars. So until next time, for John Wolak, this is Vinny Sabatello thanking you for being with us this morning and wishing you a good day.